Good day and welcome to the PSG Wealth Local Solution Update for the month of March. We'll start off by looking at the market update over different asset classes, specifically for a time period of a month. And what we actually see reading the table from the left to the right is that local equity as well as local cash was flat for the month, with local property managing to outperform other local asset class, and that was followed by local bonds at 45 basis point. Whilst if we look at the offshore global market, we saw that it was a market that had volatility and downward pressure, and coming that following that, we see from on the graph that offshore bonds really detracted, with offshore property being an outperformer at a negative 1.54, whilst the rest of the asset classes had actually detracted more than that. Now what we'll look at is a similar graph, but over a period that's much longer than a month. We'll take 7-year period. And what we see over the 7-year period, still reading the table from the left to the right regarding the market, what we then notice is that over a longer term period, the local property still is seeing some pressure given the historic 7-year numbers. That when we compare that with what happened last month, you could see that they're still struggling competitively, whilst over a long term period we see local property well above all other asset classes, outperforming local bonds as well as local cash, and we see that local bonds was a better asset class over a 7-year period compared to local cash. Whilst if we move on and looking at the offshore, we then see what would normally be expected in terms of a risk reward basis, where the relatively less risky asset class will return you a relatively less return compared to an asset class that has a relatively higher risk, and that is to say that offshore cash returning at 3.6 over a long-term period would make sense in terms of its risk scale compared to offshore equity returning 12.65% over a long-term period. Now, since we've actually seen that over the market over a long time period as well as over 1 month period, how was a market update over different asset classes, we can then start taking this picture and then having a look at how our solutions, the PSG solutions, are ranking. And on this table, we're seeing a ranking table over different time periods, starting from 1 month to 3 months, 6, all the way through to 10 years, meaning that most of our funds have over a 10-year period now. And we also just look at the last column that looks at since the inception of the fund, really how are we ranking, how has our performance been when we compare with our competitors. And what you then see from this table is that over a short-term period, from 1 month, 3, 6, and a little bit of 1 year, you really see the challenging market that the solutions are facing, the competitiveness that they have. Whilst over a longer term period, the solutions are really robust, and they're indicating to investors that they are competitive and well able to actually provide average and above average. Whilst if you focus on 8 to 10 years as well as inception, you then see that most of the funds are actually comfortably providing above first quartile performance, further indicating that for investors who are long-term investing within the solutions, there's a good chance that their financial goals will be met. Whilst if we then look at a 3 to 6 year period, even then you then see funds providing an average or over average, mostly in terms of return, still bringing to investors that a better chance with the solutions of meeting your financial goals. whilst just looking at the minimum recommended period of each solution and relative to the bench, and then we say over that minimum investment period that's invested, how has actually the solutions fared relative to the bench. And what you then see on the furthest right column is that all our local solutions have actually been outperforming their benches, especially over the minimum recommended period, while we see the enhanced interest outperforming the IB money market, the IB money market sector average by 98 basis points, whilst the PSG Wealth Income Fund of Fund outperforming the STEFI by 2.8%, the PSG Wealth Preserver Fund of Fund outperforming the ASISA Multi-Asset Low Equity by 26 basis points, and the PSG Wealth Moderate Fund of Fund outperforming the South African Multi-Asset High Equity by 59 basis points. And lastly, the PSG Wealth Creator that has outperformed the ASISA Equity General Sector by 2.06%. But over the month of March, we've seen some volatility, and what we've also seen as well from a local perspective over the graphs has been a tough market with the likes of local cash as well as local equity being flat, and just local bonds providing about 45 basis points. How has that fit in terms of our underlying funds, specifically to just 1 month, the month of March? What you'll then see is that amongst the makeup of each of our portfolios, there were funds that lagged and there were funds that were star performers amongst the underlying makeup of each of our solution. Whilst in the enhanced interest, the Net Group Investment Core, that was a star performer, whilst amongst the group it was lagged by Coronation JIBAR Plus. The PSG Wealth Income Fund of Fund saw Momentum Income Plus being a star performer for the month, with PSG Diversified lagging. The PSG Wealth Preserver Fund of Fund had PSG Stable as a star performer, with 91 Cautious Managed lagging the underlying, whilst the PSG Wealth Moderate Fund of Fund had PSG Balanced as a star performer, with 91 Opportunity lagging the underlyings within that solution. Whilst in the PSG Wealth Creator Fund of Fund saw the All Mutual Investor being a star performer for the month, with Coronation Equity lagging the underlyings. What you then also see is some of the methods that we would use, especially on a month-on-month basis, where we look at how a fund performs. And then at the end of the day, once we then see the fund really lagging its benchmark for periods of 1, 3 months, 6, as well as 12 months, we then put the fund on the quantitative radar screen. So in these funds, these are funds that we then have a specific look on a month-on-month basis, just looking at really at the people, the process, the investment philosophy, and whether there's any material changes that would bring concerns over to us as multi-managers, and if there is, then further discussions and interviews are made. Whilst if there is not, and it's more of the company, the solution lagging the market due to the investment style or due to simply the investment process, we would then understand, as we expect, that each and every investment process will have a period of really outperforming within the market, and there would be other periods where its style is not favored within the market. And that is said to actually bring comfort to our investors, that though there's these funds that are in the quantitative radar screen, we still believe that they have more than enough capability to continue to serve within these overall portfolios in achieving the returns that investors are looking for, especially in achieving the financial goals. We have the likes of Coronation Strategic Income, 9-1 Cautious Managed, Coronation Balanced Defensive, 9-1 Opportunity, 9-1 Equity, as well as Coronation Equity. These are funds that as of last month, they had actually fallen into the quantitative radar. We're still comfortable that after having had time to look into these funds, they are still serving their purpose within the overall portfolios, and we still continue to see them to offering a balanced portfolio at a competitive fee to our investors.